they put out an RFP for USDH, which is a ticker in the HyperLiquid ecosystem. Everybody who is a major financial institution, an existing stablecoin issuer like Circle, PayPal, they all kind of like came to kiss the ring in a way, and put out their own version of like their answer to the RFP, which is we will bend over backwards to be able to get this ticker. We will give all of the revenue to you, HyperLiquid, if we can be what was thought to be, and I think probably still will be, the blessed stablecoin variant within the HyperLiquid ecosystem.
Quick shout out to today's sponsor, Katana. We'll hear more about Katana's 1 billion cat campaign later today, but for now, let's get into the episode. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back. Long-awaited reunion here. We got Michael's 1 and 2 Vance. Whole crew is back. How are you doing, fellas?
Summer's over. We're back.
It's great. It was a good summer.
Yeah.
So we haven't done one of these in, what is it?
6 weeks.
6 weeks?
Yeah, long time. Yeah.
Has there been regular bell curve content as well going out, or has it just been totally ice?
No ice. So no pressure, but yeah, this is the first dose of content people are getting in 6 weeks. So a game, gotta bring it.
Live up to it. No problem.
Yeah.
Lots going on.
What were the highlights from the summer? Like it was, I was on the move all over the place, but yeah.
I think one of the things we were literally just talking about what we're going to talk about. But I think one of the things that happened kind of as, I guess the last conversation that we were having was the Ethereum digital asset treasury companies. And through August, they kind of had a moment in the sun. The start of September, they kind of cooled off a little bit. Seems like they're catching a little bit more sunshine right now. But it's interesting, I think, in that everybody's kind of looking to them as the next wave of digital asset treasury companies being able to launch, get an MNAV above 1 or 1.2 or 1.5 and sustain that, and then use the capital markets to their favor. It's always been this question. We've seen tens, maybe even honestly hundreds of pitches at this point. How do you reliably sustain something above a 1.0 MNAV? And the only answer that we've come to so far that's sustainable is debt. And it seems like debt becomes a combination of, do you have enough market cap? So basically, is your enterprise value large enough to be able to take on a debt offering, like $1 billion debt offering? But number two is your equity volatile enough such that the pricing of a convertible bond is attractive to convertible bond investors? And I think we're kind of getting to the point where some of these DATs, in particular Bitmine, BMNR, actually has the ability to go off and do like a full-fledged $1 billion plus convertible note raise. But I think that's kind of what the market is sniffing out right now. And so it's been this kind of DAT summer in a lot of ways. It started off real hot. Everybody was looking at this like 2 to 5x quick flip. And you kind of had a bunch of, I would say, tourist capital coming in, a lot of hedge funds, a lot of family offices that are saying, hey, I want to make 2 to 5x in 90 days. That sounds great. When the MNAVs compressed to 1.0, that tourist capital left. So the interest, at least from what we've been hearing, boots on the ground, is cut maybe like 40, 50% because the tourists are gone. But that's actually a good thing. And we're starting to see the structuring and process be what differentiates these different DATs. And so, yeah, it's been, crazy to say that in the last 6 weeks, we've had a full basic cycle of something like DATs, but we kind of have. So it's been interesting.
Well, I was also going to show some of the data here because I know that kind of the narrative is that these things have slowed down quite a bit. But let me pull this up on my screen. But actually, and I agree that Ethereum is still in the driver's seat here. If you just look at the share of trading volume on these things, Ethereum is still exceeding. Let me scroll back up here.
Right.
Ethereum is still in the majority here. So ETH is still just edging out Bitcoin. But if you just look at this chart over time, it looks like that's pretty solidly, that looks like a pretty solid trend here. It really interestingly as well as, there's also the Solana aspect here, but if you look at trading volume, it's extremely low. If you're following along via my screen here, you can see, it's just about 7, hovering between 7 and like 3% of trading volumes. But also, if you look at the percentage of the asset that's held by DATs, yeah, for Bitcoin, it's just over 3%. ETH is almost there as well. And Sol has really covered an enormous amount of ground since the beginning of September and is just at around 2%. So there's a huge discrepancy in between the percentage of the asset that these DATs hold versus the trading volume, which is
maybe just to tie all those things together. The trading volume means access to the at the market equity offerings. So basically, more volume equals more cash raised. More cash raised equals more underlying asset purchased, which is how you get that percentage increase. And I think one of the things that we've seen a bunch of other different types of DATs or different DATs launch for different assets. There's the hype one, which is the Sonnet, I think SONN. You've got a bunch of others, at least, that we have seen that are coming through their process. And I think what we're going to start to see is DATs going after smaller and smaller ecosystems that have sustainable value. And it'll be, I think some of them will make some waves, but yes, I think, was it this week or maybe it was last week where the main Sol DATs really started trading. And the reaction honestly has been pretty lackluster from a volume perspective. And so I would expect maybe something changes on some of that, but ETH definitely has taken the helm for attention and mind share. And it just means more volume, which means more cash raised, which means more ETH being bought.
Yep. I think it's also been a summer of people calling the top on the MNABs for the ETH ones, and Tom just slowly walking them up, doing interesting things like buying Octo, which is the WorldCoin DAT. And his MNAV is now higher than Michael Saylor, who also today told people that he would sell Bitcoin if necessary. He would write calls on Bitcoin if necessary. And so I think the Bitcoin versus ETH, dichotomy, I think right now ETH is in the driver's seat. And the boomers really don't like these DATs. That's very clear on CNBC. They don't like crypto at all. They don't like these DATs. They don't like the combination of the equity and the token. And I think there is some of these that have been doing it wrong, and that could get delisted. And we're learning about this stuff as it happens. But I don't even think a delisting of the smaller long tail WorldCoin DAT, whatever you want to call it, is going to cause a bear market. Everyone is just so caught up in calling the top, and it's been this way for years. I've almost given up on CT. It just feels like there's so many formerly gifted children, I use that word intentionally, that built a gaming PC in their basement and were told that they were going to be Steve Jobs. And now they have no coins and they have no job, and they just hate to see other people making money. So all of these gifted children on CT are absolute losers, in my opinion.
You know what? It's been a really, I don't have anything as eloquent as that, Vance, but yeah, CT is an unbelievable counter signal at this point.
They suck. They are the worst. And I don't even think trying to appeal to them as potential buyers of a token is logical. I'm honestly about to go to LinkedIn and start crypto. CT is beyond saving.
Yeah. I mean, just as additional data points on that, we have a number of portfolio companies who are launching a token in the next days to weeks to months. The average of them is having 0% airdropped to users.
I'm so glad about that.
Yeah, it's the most cancerous part, other than the current CT commentary that's happening, is just people expecting free tokens, and we just need to purge the space of those people.
Hey, you guys would have more insight into this, and I don't know if it's something you can talk about, but is anyone thinking about, the token structure thus far? When you launch a token, the amount of tokens that you have is that rigid until the heat death of the universe and it's never going to change. That's really different from startup financing, where each subsequent round that you raise, you issue a whole bunch new equity, you top up the employee options pool, whatever it is. Do you ever see any experimentation there in terms of changing the total supply of tokens, or are we stuck in this, X many tokens?
We're not stuck. There definitely is experimentation on, so there's sort of like pre and post launch. Pre-launch, I'd say the token structuring isn't like there's 100 pieces of the pie and this is the max amount of pie we'll ever have. Like that structuring has changed to be more in line with how startups are financed, not directly, but closer to that. Post-launch, I think everybody's gravitated towards, we're not going to have X number of tokens forever into perpetuity until the world blows up, but we're going to have to go through governance to make those changes. And I think that that's kind of the new norm of, oh, great, we want to add 20% like we've had portfolio companies who have gone off and increased their supply 1.3x because they want to go into the Solana ecosystem. They want to have an SPL token. And like those things are obviously supported. I think you have to go through governance though. And at the start, governance is really controlled by generally insiders. It's investors and team and people who put money in and had large token allocations. And yes, there's still a lot that's being distributed to the community, but it's sort of, decentralization, but it's decentralization with a bunch of parties that but you do have to go through that process.
Yeah. I got one more question on the DAT side of things for you guys. So in terms of a huge percentage of a huge amount of the DAT game right now is just generating eyeballs and attention that leads to volatility that these DATs can monetize. And for more detail on that, I would highly recommend people go back and listen to the Jeff Park episode that the three of us did. Yeah, about 5 weeks. I think Jeff Park is now at ProCap, so it makes sense that he would join.
Jeff's made moves. Like it's been a moving couple of months.
Yeah. So I understand that the vast majority of when people talk about yield, it's financial yield that's being generated here, right? You're kind of harvesting volatility as the major source of, accretive dilution for these DATs. Do you ever see a world where one of the advantages of something like ETH or SOL is that you have not the inflation amount of yield that's being generated, but actual execution layer rewards as a source of operating cash flow, right? The ability to deploy, eventually can this be a story of you can generate enough actual real income off of these assets, either in DeFi or from staking rewards that you can pay down and, finance yourself more. Is that real or?
So here's, I guess what is like officially out there in the public view is probably like 2.5 months delayed from what's in conversation on putting, structures and DATs and things together. So like the stuff that is being launched right now was talked about at the start of the summer. And the stuff that's being talked about now will launch probably by the end of the year. Where the narrative is right now is that digital asset treasury companies, obviously, the super vanilla reverse takeover, pipe, ATM, convertible debt offering, that playbook with, a Tom Lee or a Joe Lubin or whoever at the helm to be able to, drum up that attention, go on CNBC twice a day. That playbook has run and it's worked for some. It hasn't worked for others, but that's not where the playbook is right now. The new things that are going to be launching imminently are different structures, different types of foundation relationships, different types of preferred access deals. But it's not like I would say where things are moving, which is we're going to develop there are people in the industry who are coming and pitching, who are saying we're going to develop an operating company. This isn't a digital asset treasury company. This is an operating company. Yeah, we're going to hold digital assets on our balance sheet, but we're going to use those productively to generate GAAP accounting profit.
Yeah.
And that is a fundamentally different construct because when you are earning tokens and the tokens that you're staking are earning you more tokens, that's not GAAP profit. Like you can't account for it. You don't have a price to earnings. But if you have tokens that are earning you cash flow from other business activity, that is GAAP accounting profit. So I would say we are definitely moving in that direction. Being able to have a price to earnings on this stuff is going to be a fundamental difference where even Jim Chanos won't have anything to say at that point. But I do think that the narrative is definitely moving there. There aren't very many assets in crypto that can do this. And so people who can figure out what those assets are, those are going to be the things that have attention brought to them based on DATs. But if you're just earning more tokens based on tokens, you won't have that same flexibility.
Yeah, and maybe just a note on the Solana DATs. I think one of the reasons that people were a little bit spooked and calling the top is because everyone is long SOL, and these DATs for Solana have gotten off to a relatively slow start. Not in terms of the price action of Solana itself. I think the mission has generally been accomplished on that side, but I think in terms of the volume, there is something to be desired when you have 600,000 shares of daily volume and it's priced at 30. So you've traded $1.8 million today. And that's Forward Industries, and I don't know about the other ones, but if you're seeking to activate a $4 billion ATM on $1.8 million of daily volume, like what have you done? And I think like you have to think about what are you trying to accomplish? Like, are you trying to start the retail, like Bacchanal, like we're gonna get all the people buying and excited? If your name is not Tom Lee, I don't think that's really possible. Dan Ives is a second contender, but he's also taken, and so that's not what they're doing. Are you trying to move the underlying with the amount that you're purchasing plus the front running flows? I think that you can make an argument there, and you've definitely accomplished that to some degree. But what we've noticed with these DATs is that people will front run you to the dollar amount that you raise in the pipe and then sell that into you. And so the price movement that has happened in the recent days, months, weeks, whatever, it is not like the go forward steady state because they're selling into the bid. And so, is the last thing that you are trying to accomplish is like equitizing revenue from a blockchain. And if it's just inflation, I think it's like there leaves a lot to be desired there in terms of the truthfulness of that statement. And so like, I think a lot of these are like, it's not like the max cynicism playbook where it's like, no matter what happens, we're just going to launch this equity and it's going to do well. Maybe it's not that cynical, but I do think they haven't even thought of steps 2 through 5. And the best rationale that I've only recently just heard is like, we're going to buy the other DATs. And it's just like, that is, say that you're below 1 XMNAV, right? And you're trying to buy someone who's even further below 1 XMNAV. Why would they sell to you if their optionality is just to dividend out the underlying at 1 XMNAV? And so, like, I think a lot of the excitement is just like people are not thinking about what is actually happening or what they're even trying to accomplish.
This episode is sponsored by Katana. Katana is a DeFi first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. The 1 billion KAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
I've got, what do you guys think about this? Not related to market commentary at all here, but I saw Kyle mention that for Forward Industries, they plan to tokenize their stock and run the entirety of the business on Solana, including dividends, governance, stock splits, fundraising, payroll, and vendor payments. And the reason I'm kind of interested in this is because I've been trying to think through what are the implications, like maybe the less obvious implications of a bunch of stablecoins coming on chain. And if the stablecoin number goes from just under 300 billion today to 3 trillion, like Scott Besson says, what are the implications of that going to be? And Blockworks has gotten pretty in the weeds on like the on-chain data side of things. And, one thing that I've noticed in a lot of these conversations with teams is they run not using a lot of Web 2 software because it doesn't integrate directly. And I'm thinking if the amount of payments changes from dollars to stable coins, you might need to start rebuilding really basic software functionality, like exactly what Kyle said here, like payroll, really basic, just, nuts and bolts business type stuff. And it's pretty interesting. It's pretty interesting.
There was an entire year in 2021 where an entire category of investors went after DAO service tools. And there was kind of like this meme for a while where it was like, there's actually more service tool companies than there are DAOs. And, it's like, great, we know how to do Workday. Let's do that, but on chain. Great, we know how to do payroll or, CRM or I do think that there's going to be a lot of infrastructure that's built out to do this. And look, I think maybe this is part where we can switch to stablecoin conversations, but like the reason why you have, and I would separate the worlds very distinctly into stablecoins, which are used for payments, and then yield coins, which are used for generating yield. The reason why you have the two separations and the reason why you would have the blockchain adjudicate payments is that you don't have to trust that they have integrations into your Wells Fargo account or JP Morgan. I mean, this is why Swift exists. This is why Zelle exists. All the different payment networks themselves, Visa. But if you are using a blockchain, you don't have to trust that they can receive it on their end. It just works. And that's the advantage of having a stablecoin that you use for payments, whether it's person to person, which I think, basically won't ever take off at scale, but business to business is definitely something that will take off and be used because it's just seamless and you can do everything on chain. And Tempo obviously launched as well. Well, the last couple of weeks we should talk about that, but I do think that there could be, very distinct business lines that would move on chain because they need to move their cross border payments somewhere.
Yeah. One quick note on that too is I think there's a big difference in between those DAO tooling companies versus the opportunity today, because everyone's like, everything's going to be a DAO. Let's like make this way more. But the pressing need actually is when everything happens on chain, it's real time and the data standardized. And you can do some cool shit with that doesn't fit into a legacy software stack. So it's less about let's reinvent an HR solution for Arbitrum DAO from the ground up versus, hey, there's a bunch of companies that are now going to be doing payments on blockchain rails. What breaks there, or what like cool new things can you do that you couldn't do before for tons of businesses, right? Well, on the CT point, I deleted Twitter.
How do you feel?
Way better.
Yeah.
Way better, man. It's crazy. I don't think people realize if you're like you're basically grinding your face against a machine. It's so negative now. I don't know what flipped. I don't know if it's CT or if it's
these people own crypto. That I think is the problem. No one actually owns coins anymore, so they just hate when things go up.
Yeah, I just feel way better. Yeah. I do feel like I've missed out on some stuff though. And actually maybe to transition to stable coins here, one thing that I did miss out on the details of was everything going on with, okay, let's just break down to, there's a bunch of stuff happening with stable coins. There is the HyperLiquid RFP, which was pretty fascinating, good drama. You guys were probably more in the weeds than me. I'd love to just get a quick, summary and your thoughts and take on that. There's what's going on in the Sky ecosystem, and like Spark has been doing super well recently. And there was one other thing, but maybe we can just start with
Tempo. There's Arc. There's
Tempo. Yeah, can we end with that? Because I want to get your guys' take on corporate chains. Yep. Let's start with HyperLiquid.
Yeah, look, the quick and dirty on Hype or HyperLiquid. Just to go through it, they put out an RFP for USDH, which is a ticker in the HyperLiquid ecosystem. Everybody who is a major financial institution, an existing stablecoin issuer like Circle, PayPal, they all kind of like came to kiss the ring in a way, and put out their own version of like their answer to the RFP, which is we will bend over backwards to be able to get this ticker. We will give all of the revenue to you, HyperLiquid, if we can be what was thought to be, and I think probably still will be, the blessed stablecoin variant within the HyperLiquid ecosystem. And there was some scuttlebutt or kind of back and forth on, what was actually like native markets seem to kind of like come out of nowhere, small team. But honestly, like I think it's the logical choice in a lot of ways because you get to grow with the industry and it's kind of homegrown. So it's a team that's spun out of the Hype ecosystem. They're going to launch, and they won. So the validators decided that they would get USDH, but it doesn't stop any of the other versions or variants from also vying for, their own tickers. And so Sky has come out and said that they're going to continue to build a HyperLiquid star. They're going to start putting things on HyperLiquid, especially the buyback as that becomes more possible. It doesn't stop any of the desire for these other ecosystems to integrate into the Hype ecosystem. And I think that kind of showcases the gravitational pull that Hype is having right now. It's just daunting. You can't escape it. It's like a black hole. And I would say with Hype in particular, what we have seen so far, and Hype just hit an all-time high last night. That is a recognition of the power of the perpetuals product that they have right now. It's, making $1.5 billion a year or something along those lines. But what I think everybody's starting to realize is there's two things now. There's, number one, an adjacent business line, which is the stablecoin business line, where let's say some net interest margin, even if it's 2 or 3%, is going to flow towards Hype in one of these models to be able to get kind of blessed into this ecosystem. And number two, you're going to start to see a lot of people, a lot of large platforms like Athena and Sky and probably PayPal and probably Circle, and they're going to start building using a lot of the new launches and a lot of new infrastructure that's launching in the next few months from Hype, in particular HIP3, which allows you to create new markets. And so obviously native markets won, but I would actually say HyperLiquid is the one that won the hardest. Because it's re-rating right now because of all this recognition. You've got perps, you've got stablecoins, and then you've got all of this other stuff that's going to happen through partnership. It just is a very exciting time for them.
So, Vance, I don't know if you have thoughts.
Yeah, I think I don't even know if USDH is going to be the winner from this. They have the ticker, they have the quote fee structure, which is 80% lower, but they're going to be auctioning off more quote assets. And there's a lot of people who would love a piece of that business. And it's kind of like, the function of expectations will be, what's reflective of USDH's success. I think everyone expects that USDH will be the stablecoin du jour for HyperLiquid on a go-forward basis. I don't think that will happen. I think there's going to be healthy competition, and the stablecoin game is going to be multifaceted, both in terms of being a quote asset, also in terms of who's depositing and farming HLP yield. So, I think it's interesting that they gave it to a team that is backed by Stripe and just like basically TradFi people. Good luck to you. We're coming.
I thought it was fascinating. I did an interview with Jeff maybe 4 or 5 months ago. And we talked about this we didn't talk about the RFP thing, but we're like, what are you going to do with stablecoins, right? Because to me, there was a big question here, is HyperLiquid an exchange or is it a platform? I should also say I spent the last month, I really nerded out. Shout out to Chain Yoda, who recommended Brian McCullough, How the Internet Happened as a book, which is really, really good.
Yep.
And then I listened to a bunch of these acquired episodes, like these 10-hour deep dives on Meta, Microsoft, Google. And yeah, there's a lot of lessons, man, that we could take from these companies. But it made me really think about what a platform is, and the lock-in that a platform has. And, like different ones have entrenched their platformness in different ways. Like Microsoft had the monopoly on, the operating system and the connection to the hardware manufacturers. Facebook tried to be a platform early in their existence. They had a whole developer platform. They opened the social graph before they got disrupted by mobile, and now they live on Apple, right, as an iOS app. And so that was always a big question for me: is HyperLiquid an exchange or is it a platform? I thought this RFP was a super interesting way to kind of thread the needle in between. Like if you look at HyperLiquid as a business, it doesn't look that different from Coinbase. It's an exchange. They have stablecoin revenue, that they extract from Circle. Same thing with Binance. Like you can kind of squint at it. But I think the amount that HyperLiquid will be, its platformness will be defined by how much does it allow independent apps to generate revenue on top of it. So I thought this was a really cool way of kind of being fair, letting people take a slice. I just thought it was a really interesting approach.
The Bill Gates definition of a platform versus a company is that a platform is where the economic value that's generated on top is greater than what is generated within. And that I think is very much the case here. And this is what I'm describing. It's like, if you look at HyperLiquid just as a perps exchange, it makes $1.5 billion a year. S&P trades at, 20, 25x price to earnings, 40, 50 billion. Yeah, that makes sense. Like it is growing like 5 times faster. And it is in a category that's like differentiating and getting regulatory adoption. And so I would probably say higher. So maybe the perps alone is something that sustains a higher reasonable valuation. But what I think everybody has seen from this RFP and then probably also digging in a little bit deeper on HIP3. Like we still talk to people all the time who are like, HIP what? And I think what people are starting to recognize is that the platform capabilities here are going to be far greater than what a single product within the ecosystem can build. Whether or not it's built by the team doesn't matter, but the economic value will be driven back to the protocol and the platform itself. But there's also going to be a lot of economic value on top of it.
Yeah, I also think I saw. I think it was totally, saying it's either this or that. It's either a decentralized platform or it's an exchange. I just don't think that's how this world works. It's obviously going to be more than one of those two categories. And HIP3 is more of a platform. The whole like auctioning off a stablecoin on like nepotism, favoritism, that just feels like Coinbase. And then you have things like HIP4, which is prediction markets. And so I think especially in the era where equity and tokens are blurring, there's no need to carve out these specific definitions. The only reason is for regulatory clarity. And, it seems like we should talk about that, but there's kind of this emerging battle where it's like, I'm not going to name which funds are on which side, but like there's some people who don't want any new rules. And I think there's some people who want like all these new rules. And I think our position is that we could kind of go either way. It would be nice to have some clarity, but I understand kind of over-regulating at this juncture is probably not the move either. But yeah, like there's a lot going on with the regulatory stuff, and Brian Armstrong was on the Capitol Hill or Capitol Hill, not the Capitol Hill, yesterday doing market structure stuff. So that's the next big domino to fall. And if you thought that Genius was bullish for stablecoins, I think market structure is that for alts. And it's really different when that comes about and people are able to write research reports and price targets and guidance and buy, hold, sell, overweight, underweight for these alts. So we're looking forward to that if we can get this regulation done.
Yeah, just as context, a couple other data points, and these are anecdotal, but like obviously we have a lot of friends who are in traditional venture ecosystems, work at firms that are not focused on crypto. And some of them are even sort of like the fintech people or on the fintech team.
Yeah.
Every single one of them is reaching out to us being like, great, stablecoins, tell me about them. Great. How do I do, wait, okay, let me put this together. So you put the coin and there's a dollar, like it is mind bending to them. And they're all playing catch up, and this is post Genius reaction. And I think as soon as you have clarity or whatever variant it ends up becoming, it's going to be the same thing for every other asset, because we know that there are banks who are waiting to write initiating coverage on these assets, which is research reports where banks, we as investment managers cannot say we think price is going X. As a research firm like Goldman Sachs, they can put out research reports and say, here's our analysis, here's our market positioning, here's our price target. And as soon as that starts to happen, I think you're going to see a re-rating of the rest of the industry. And the reason why you've seen ETFs, spot ETFs, is because they've been declared commodities, and so you're in this regulatory back and forth where if I was to say I think gold's going to 5,000, that's not a perspective that matters, right? But if you're talking about securities and you're talking about what we're talking about here with post clarity, that's going to be what gives us the opportunity to do that.
Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion KAT campaign is live. Bridge and deposit directly into Vault in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research.
Gold at 5,000. Where would that put Bitcoin? I mean, we are 20% higher than when the cycle topped 2 weeks ago, according to CT. I think there is we should talk about this too, but the end of cycles or maybe the reorienting of cycles. There's the business cycle, which is, I think we are in the early innings of that. There's the rate cutting cycle, which There's been a bunch of analysis, both from like, Julian Timmer, who runs Fidelity, and then I think B of A put out one that was like, hey, if they cut rates near all-time highs, it's literally been 25-0 in terms of the stock market being materially higher in 12 months. There's all sorts of analysis. Like, there is no evidence to suggest that the market has topped if you think about it from a rate cutting perspective. If you think about it from a rainbow Bitcoin chart perspective, there are all sorts of reasons.
My preferred perspective.
Yeah, there's a force field that comes with that, which prevents any logic from coming into your brain. And it's just like so tragic that everyone thinks like this. And like, what do you think the end of a cycle even means? Like, does it mean that we just like pile into the Russell 2000 and buy like plumbing businesses and HVAC shops and things like that? I just don't think they're going to stop debasing the currency. They're going to keep cutting rates. The price of money will keep going down. I just don't think people are ready for a reality where you don't have these clean 4-year cycles, the last of which was punctuated by a war and then 500 basis points of rate hikes.
Right.
I just don't think that's coming.
In 4 meetings.
Like, the most traumatic part of my life was when they were just going for 75 each meeting for like a year, however long that was. And I just remember losing so much money and being like, wow, this is what it feels like.
Well, I think
wait. Last thing is like, our LPs have asked us, like, do you think there's a bubble in crypto? What for people buying metaverse land and like, beachside real estate in crypto voxels 4 years ago? It was like, that is not happening. There's no euphoria in alts. The ETFs and DATs are what are pushing Bitcoin and ETH up. There's only 4 coins that have outperformed Bitcoin this year. What's the problem?
Can I actually? One more fundamental driver here is, we were talking about Genius, and actually Jake Chervinsky, did a big post during this whole USDH overview about, because a lot of people are labeling their offering as Genius compliant, and he made the point that there's no such thing as a Genius compliant stablecoin today. Genius doesn't become effective law until 120 days after the rules are finalized, which is supposed to happen by July 18th, 2026. So that expected effective date of Genius at November 15th is at November 15th, 2026. And even then, it really depends on the team to be able to navigate, all of that regulatory morass to actually get. Now, all of the regulatory bodies are trying to make this easier and easier, but still, that's a huge catalyst next year. And
you get 3 years until you get to come into compliance. And like, everyone loves this legislation because it makes it legal, but like, the legislation is actually like kind of dumb if you actually think about it. So what people are doing is they're saying our stablecoin is Genius compliant, which means that you give us $1, we'll put it in treasuries, and we'll give you this this crypto dollar back. And then they say, if you want to stake that Genius compliant dollar in a non-Genius compliant stablecoin, you can do that. The workaround is literally that easy. And that is what has created this huge boom of interest in stablecoins in this industry.
I would clarify and say this huge interest in yield coins.
Yes, huge industry yield coin. Imagine something like that for market structure. Market structure doesn't even need to be very good for people to get super bullish about it. It just needs to be like conforming to just like, not to overuse this word, but like boomer thinking. Like, they just want some sort of stamp so that we can just move forward and be done with it. They don't actually care if the regulations are good or not.
I have a question for you guys. Going back to, Vance, what you were saying about a little bit of a war in between different asset managers in crypto. Some people want to keep the rules the same. Some people want to change them. Can you talk to me a little bit? What is the current state of clarity? Because the way I've heard it described is one iteration or approach seems to be enshrining some of the stuff that crypto people have talked about for a long time. No more than 20% of the token supply going to the team, stuff like that, right? We're trying to enshrine this idea of decentralized governance. It seems like there's another faction which is saying, hold on a second, some of that old thinking didn't actually materialize or work. And we actually want people to be able to, launch a token that isn't necessarily security, but not, give away governance to the community within a couple of years and things like that. And they're actually moving towards this like equity light framing. So am I right that those are the two sort of different approaches here? And where does it seem like things are going to shake out?
I mean, look, if you incubated a corporate blockchain with somebody, I'm not going to name names, who could they be? And you own 50% of that blockchain, and the threshold for decentralization is 20%. You're probably going to advocate against that regulation. Like, I don't even hate that. I think it's like you shouldn't hate the player or the game. Like, you're kind of both. Like, it's fine. But I do think what we should not throw out with that is basic disclosures, like basic information standards for sharing with retail. The reason why CT has become so cancerous is because we have burned everyone else that has even sought to come near it through just like fucking Ponzi schemes and like dumb token ideas and people that don't disclose information. That should stay within whatever legislation gets passed. I think the decentralization thresholds, I don't even know if that matters, honestly. Like,
I think you have to have that to be able to have this. I think the other element that's really important is a path, and this is like, to use the Vance terminology, the boomer thinking part of it. Like, we need to know what's a commodity and what's a security. Like, they're still gonna be holding on to that, and that's like the definitional requirements that they need. So the path to get there is what is sufficient decentralization, because that's when you move from a security offering to a commodity. And I think that part still is going to be in there, and it definitely is something that is core to what is, market structure for every other asset.
Yeah.
And then everything else that comes with that. So to maintain that status, you have to have disclosures, you have to have decentralized governance, ownership targets, et cetera. But I do think that you definitely have to have decentralization as an element, because that's the path to commodity status.
I have also in this last month, one thing that I've just been thinking about in general is, how people always say that crypto is regulatory arbitrage, as if that's something you have to hold your nose and look down at. Maybe crypto is just the answer to the financial system being way overregulated. Like, if you look at the opportunities, if you think about, when I came into crypto, I looked at ICOs. I was like, this feels crazy. I had a lot of negative thoughts about ICOs, like many people did. They're very scammy. Retail gets burned. But then, when you think about what's happened since then and the different iterations of investment metas, they've weirdly got less and less friendly to retail since then. And I believe, I'm not picking on VCs at all here. You guys know I'm not like that at all. But the next iteration was retail didn't get to invest early. So you got a bunch of these very overpriced infrastructure tokens that went down, arguably less good for retail. And then this next iteration is DATs, which, whatever, I don't have really strong opinions about DATs, but it's definitely very good if you have a lot of private access to information and you can participate in these pipes. It's worse structure for retail and it's way more opaque, but somehow it's allowed. And it just seems like...
Let's clarify a few things. Number one, most of the DATs, at least currently, the underlying has far outperformed the actual DATs themselves. So if you're investing in a DAT, it's probably because you don't have access to the underlying. And there are still a lot of players in large financial markets that don't have access to crypto. They don't want to have to go through a new system. They can't go through a new system. There's a lot of structural process that is leading the way for DATs. I also think that's one of the things that the ETFs, the spot ETFs, enable as well. But DATs also have a yield component, and maybe that gets solved eventually. So DATs are one thing. I also agree that I think we're moving in a direction that, at least historically, it was the Wild West, right? Here's an Ethereum address. Here's the block number that we're going to start our ICO. And poof, 4 blocks later, we raised $40 million. That's amazing. Yeah. Super illegal. Also, people got really badly hurt in those situations. Some people made a ton of money. But the thing that definitely happened is all of those fundraisers raised all that money. A lot of them also got sued because of that. But what I think is important here is that there does need to be some level of control around who is able to invest in certain types of opportunities at which stages. Is it here's a deck that has Vitalik listed as an advisor, and we're going to build DentaCoin for dentists, and it's going to be this amazing thing? Absolutely not. You need to have some backing, that you have some core technology, you have someone who, a venture capitalist historically, is the one who takes on the technology risk, takes on the execution risk, helps build the team, actually does real valuable work at the earliest stages, which is why, we can pool capital together and build a portfolio. Is that something that some random person who hears about it on the internet should be putting half of their life savings into? Absolutely not. If at a point of sufficient decentralization, or in the case of some iterations of the Clarity Act, you're able to invest a certain amount of your capital into a pre-token offering that's structured with disclosures, with clarity, literally, into the process, that's a totally different situation. I actually think if done well, Clarity will be a step back towards retail, getting more protections, but also more access. And so I would say it's, in both cases, a step in the right direction.
All right, guys, I want to get your take on last thing on stablecoins is tempo. So this was again a couple of weeks ago. So if you're listening and you've already heard a lot, bear with us here. But I'm curious to get your guys' take because I looked at kind of the headline figures here. Matt Huang of Paradigm fame is leading this as CEO. There's a lot of connections in between Stripe, Sequoia, Matt that probably gave birth to this particular construction. But they're their own L1, right? Which is that's what everyone's talking about. It's not built on Ethereum or Solana or any other chain. So, and it's got people talking again about corpo chains, right? This is we've gone through several different iterations of enterprise blockchain, POA to now, POA and corporate chains are really the same thing. But I would be curious to get your guys' take maybe on tempo specifically, but also just on the proliferation and success of these chains. How much more of this are we going to see? That type of stuff.
Yeah, there's been, I think this is actually fairly interesting. I honestly don't know enough about the payment stack to determine if this is like a real threat to the banking establishment. And there's been two reactions to this, one of which is like, oh my God, the banking establishment is over and they're going to eat all the fees from all their card partners and payment partners and all this stuff. And then I think there is the minority opinion, which is that this is going to be a slog to build and bootstrap. And if there's no token, that's going to be tough. And they have all these amazing design partners, and we've spoken to a couple just because like we've been interested in what they have to say, and their response has been pretty much as vague as just like our understanding of it, which is they said like it's like we're going to do things on a chain. And so I think there is a large chance that this is people are like too over like reacting to this, like in terms of it being like a cancer to the industry because it will be so successful. I think the realistic take is that it's going to be a slog to build. But I do think the things that are interesting to me outside of just the actual blockchain itself is, if you bet your firm on this, which it seems like a lot of the thinking is that Paradigm is betting the firm on this working out and all that stuff, you have pissed off basically every single builder in Ethereum and Solana and all of your portfolio companies that are doing stablecoin things. Like Nick Van Eck, who is the CEO of a stablecoin company called Agora, like he was like going after, Matt Huang on Twitter, and like, the USDH proposal was like Paradigm needs to recuse themselves from voting for this. So, if I were going to bet the firm on something, I would just need to be so confident that it would work and it would be a real business opportunity, because I would know that would piss everyone else off. And I just kind of wonder if they actually thought about that. That's my thing, and I think tempo will be pretty interesting. And they've been making a lot of big bets, and like HyperLiquid, I think they have like $1 billion or north of that coin, and like, man, that will serve them well. And maybe this is another one of those, or maybe this is like just a misstep. I think it's kind of too early to tell.
Definitely too early to tell. Maybe a little bit more of the payments background, and I'm sure some people know this, but the way Visa got started, actually Visa started within Bank of America and then spun out, because what they recognized is that you can't have this be owned and operated by a single entity, because what you need true partnership in all of the entities coming together. And so you need to create a new entity, and they called it Visa, to be able to do this. And originally, the way that it worked was you had all the major banks who were, taking the concept of credit cards or charge cards and sending them to their customers. And what you had with Visa was a program where you could participate in the Visa network, and however much volume you brought as, let's say, Bank of America, that was how much profit cut you got from the total network. And so it was basically like a eat what you kill. We all work together. And that's what enabled the ability to go to every single retailer, restaurant, everything, point of sale, and say, hey, Visa, it's all the banks coming together. And hey, like, we're going to be able to distribute this to every single person who has a bank account. You just got to accept it. And like, that's how you build the two-sided marketplace. It's going to be really difficult to do this from essentially a single entity, which is Stripe/Paradigm. And, whether it's Paradigm, who owns a significant portion of this, and it's just like the Paradigm chain, or whether it's the Stripe thing and they own a significant portion of this and it's the Stripe chain, I hope, and I'm sure they know this stuff too. Like, the Stripe people are some of the smartest in payments, but the history suggests that this has to actually become decentralized over time. And I think this is one of the reasons why people are giving it or are knocking it so hard as to like, look, we've already got a pretty decentralized ecosystem that could run this infrastructure, and yet you guys chose sort of the profit path. If this becomes super successful, which TBD. So I don't know. I come at it more from the payments perspective, and I think the power and the success of this will be determined based off of the true decentralization, not just of the technology, but of the assets and the incentives.
And we only have two mega funds in crypto, one of which is Paradigm, and they're doing this, and the other one is Andreessen, and they're pursuing a very different strategy. I think of the Andreessen strategy as more consumer, more kind of ecosystem based. Sure, they do silly things like Story, but it feels like they are investing in the future of consumer apps. I feel like Paradigm has kind of given up on that and is going in this direction. And it's always so sexy and interesting to build infrastructure because you don't have to like come up with a use case for it. And so, if they were kind of like on the other end of the spectrum doing like the cypherpunk, decentralization, flashbots shit, and now it's like full corpo chain, maybe the pendulum has swung too far in one direction strategically, but we'll see. It's like, I don't think everyone needs to be up in arms about this. It's not a guaranteed success.
Yeah, you guys will have to forgive a couple analogies here because I just read this book and it's just fresh in my mind. But I mean, this was the whole battle right between the open internet and the superhighway, the information superhighway, which people literally thought that the internet was going to be basically very similar to corporate chains, but it's actually going to be on your TV. And they thought that the winner of the internet was going to be an interactive television, the cable providers, and Microsoft. And there was actually a joint venture that Bill Gates got all excited about called CableSoft.
So
didn't win.
Sorry to interject. This is where MSN comes from.
Yeah. Exactly.
Microsoft Network, MSN.
Yeah. So, and I saw some of this I popped in, here and there, and I saw some of this in the, HyperLiquid RFP. Oh, Venmo, X many users. And I'll just note that this is a point of almost extreme skepticism, pessimism. This is why being off CT has actually been very helpful. Despite the amount of proof points that this industry has, the amount of successful startups that it has, people have never been more pessimistic that we aren't going to be able to outcompete incumbents. And I just think that we can. I think there's a lot of reasons why that is. We don't need to get into it now. But yeah, I think also with the corpo chain specifically, you guys know I used to be a big Cosmos guy, and I always saw the desire to own the full stack. But I've kind of come around on it, and it's like, it's really hard. It's not core. Honestly, if you want to do payments, and by the way, you can extract most of the value. There are systems like app-specific sequencing and the roll-up architecture. You can literally kind of have your cake and eat it too. You don't need to actually build out all this crazy infrastructure, and you can still keep most of the economics for a tiny toll that's not core. I don't know. It seems.
Here's a higher level question: would you rather is selling block space for stablecoins good business? Maybe there's some element of this question that is like unknowable currently. I would bet against that being the case. Yeah. Do you want to own a percentage, or do you want to own the blockchain that has the higher frequency of trading, or do you want to own a blockchain which has more TVL and like lending liquidity? I think everything that we know today about stablecoins would say that you want the lending liquidity because that's the natural profit engine of stablecoins. Tether has made $0, like maybe de minimis, sending stablecoins back and forth. I do not think that is real business. And so maybe the end game of Tempo is to build financial services around this block space. But I do not even think that the block space is like tempting enough for people to move their existing payments stack onto it. So like it doesn't follow that they would then be given the opportunity to build all these other services around it. This is a fair case. Also, maybe this is cope, or maybe I'm washed. I don't know, but this is how I think of it.
Well, I mean, there is a real world example of this playing out, which is Hype versus Solana. High transaction throughput, the amount of revenue that's being generated by Solana versus Hype, which is taking a fee for the perps exchange that they built.
And that hits on the frequency question, which is this. If the native speculative engine of your blockchain, the trading paradigm, is based on high frequency trades, that's a bad business. And the reason that's a bad business for the market is because a lot of, you think about HyperLiquid's exchange fees and trading fees and all that stuff, a lot of that is just lending. It's people lending, on a perp basis from one person to the other. And those lending fees are what are the actual fees versus like I click and there's like a percent trading fee, which is what Solana does. So that's why like HyperLiquid is able to generate so much more fees, is because they have more duration on their actual trading paradigm.
So just to like play devil's advocate here, I do think that when we talk about payments, a lot of people immediately go to like, I swipe my credit card at the store and that's payments. In reality, like that's not payments. And there's another type of payment, which is business to business payments, cross border payments. There could be a pretty distinct strategy with Tempo where you're holding assets on chain, you're putting them into money market assets in the meantime, you're flipping them from pesos to dollars, and like that's an application that they build. I don't think there's it's going to be extremely difficult unless Visa switches all of their infrastructure over to stablecoins for credit card based payments to be run on a blockchain. Period. Stop. And so I think payments. There is kind of a middle ground here, which is like business to business. You got more duration. You've got more bespoke financial services potentially, but you do have to go in that direction. And I think anybody on the Tempo team listening to this, I would say move more in that direction to have a more sound investment and business strategy.
Yeah, well, it'll be interesting to see how it plays. I also think if I had to guess at why this annoys people is like this doesn't seem like a desirable end state. I think like a real like going from a world of fragmented TradFi databases to a world of fragmented crypto databases doesn't seem like a step function improvement, especially when interop is still so poor in between these different chains. So at least for me, I'm kind of like, okay, I can see it. I see why they're taking that swing, but also I can't really root for this that much because I don't really want the end state of crypto to be all these different L1s.
Let me put a finer point on it. I think that this is more a shot at Stripe than anybody else. Or that's where the anger should be pointed, because Stripe, I don't know if people remember this, but Stripe actually was an original investor in Stellar, and they own like 2 or 3% of Stellar from 2014.
Really?
And yeah, and when Jed spun out of Ripple and started Stellar, Stripe was one of the original partners. So they've been in crypto literally for a decade, which there are very few people who can say, that they have on-chain transactions from pre-2015.
Yeah.
And so I think it's important to note, they've been following this industry this entire time for the past decade plus. They've been waiting, they've been building their company, and they have chosen a path of centralization in a world of decentralization. And I think, they aren't just coming in at the end of this and being like, oh, wow, stablecoins, what an amazing invention. Like, we're going to plug in now. It's like, oh, we've been waiting. We've been biding our time until there's an opportunity for us to step in and own this stuff ourselves.
Mm-hmm.
We're going to take this away because like, we don't think you guys should have it. And we're going to co-opt stablecoins, and we're going to co-opt kind of like this entire narrative because we're the biggest payments company in the world. And that's what we want to be in. We're going to continue to be. So like, thanks for doing all the hard work. We're going to take it from here. It is kind of the perspective that I think, they basically told everybody.
Just move your stable coins. Just move them. Why are they not coming? Oh, no. We didn't think about this. I don't know. I don't like the corporate chain stuff. I think it's very dumb.
But they're going to take their swings, right? Like you can't. They're just businesses. I don't really blame them for trying to do something that they think makes sense. But I remain optimistic that I don't think that that's going to end up winning out. I mean, the real value proposition here is Stripe is really good at generating profits and extracting revenue, right? Like I agree with something like payments. You need something that's more net neutral, and we'll see. We'll have to see at the end of the day.
It tells you more about where Paradigm thinks crypto is than probably anything else. Like the use cases, the platform, it could be very successful. Who knows? I think it's a bit silly. But I think the reality is that a lot of the cypherpunk stuff that got funded did not play out. Like DAT investing is replacing a lot of venture investing. And I think that's totally fine. Like the winners are going to be more on a power law basis. Like this year, 4 coins outperforming Bitcoin. And there's going to be less space for like we invested $100 million fully diluted network valuation, then it opens at $1 billion. And so with less things to sustain like that, I think you're going to see more people doing these things where it's like we do a DAT, but we get all the sponsor and promote. We do a blockchain, but we own 50% of it. Is what it is.
It's a little bit of a spiritual bear market at the moment. Like people are very just
Only for some people.
I was going to say, only for people who expected we're going to run back to
We are
2021
loving it.
retail cycle was going to come, and it's going to be raining tokens, and you just throw a dart against the wall and hit a 3x. Oh, this is going to be easy. I know this playbook. I saw it 4 years ago.
Yeah,
Absolutely not.
fair enough. Yeah, fair enough. But I think also, I mean, even like what are we talking about on this podcast? It's like corpo chains and DATs. It's like it's a little bit less, right? It doesn't, get the hair on the back of your neck standing up like some of the early, ideas.
You guys put on Digital Asset Summit. You're trying to get the institutions to come into the industry. This is what it looks like.
It shouldn't be exciting, though. It shouldn't be every week we have a new primitive to talk about. That's not a real industry. Like that is just not what
Metaverse land, man.
coming soon. Like it's just there's so much going on under the surface that's where you need to derive your excitement. But nobody has a right to make money in this market or a right to be entertained by it on a weekly basis. That's just such a weird way to think about it. That's not how traditional tech thinks about it. I mean, I guess there is some AI stuff like that, and TVPN is kind of encouraging that culture, but I don't. Even the TVPN guys seem a little burnt out. Like honestly,
they just had a Wall Street Journal article come out about them. Did you see?
Yeah, no, it's great, and but like, how many startups can you interview? Can you get like the best startup of all time on your show every week? No, there's only like 20.
Wait, did you guys see the Tucker Carlson interview with Sam Altman? I'm taking a bit of a detour here.
I didn't watch.
This is so, I mean, there was this is not but there was a, tragic death under relatively suspicious circumstances of an OpenAI employee who was going to be a whistleblower. And he was found dead in his apartment, and the security feed, around his place was cut out. And Tucker Carlson's interviewing him. Yeah, right before. And he's like, so did you kill him? And
he didn't say that. He said the response from Sam was literally like, are you implying that I had something to do with this?
You need to
he looks so guilty. Oh my God. Dude.
You need to watch the Tucker Carlson interview where he claims that he was attacked by a demon.
Oh my God.
In the middle of the night. And he has like all these claw marks on him. And then like 2 weeks later, we were like, yo, you cannot. He's like, that was my dog. It's like, yeah.
Dude, Peter Thiel's talking about the Antichrist. He's doing like a 5-part series on this.
Look,
we live in times. We live in times.
There's a great bit from Tim Dillon talking to Rogan. And he goes, so the guy that's building all the drones to go and attack, our enemies, and the guy that's building the tech to surveil on all of us and everybody else around the world, his next biggest thing that he's interested in is the Antichrist.
But like,
you're telling me it goes 1, 2, Antichrist.
I watched that. I don't think Joe Rogan is like low IQ, but like I do think he's like, yo, these Praxis guys they're trying to start a new state. It's like, yeah, we've met the Praxis guys. They're nice guys, but like they're no threat to the West. Like that, I feel like it's just the misconstruing of tech and Silicon Valley and what it's capable of. I think people are more interested in them being like the men behind the curtain than there being absolutely no plan at all.
Yeah.
And I think the latter is true. Like there are no lizard people. It's all just fake. It sucks, but that's true.
Yeah. We're in a time where it feels like, you want to keep your mind open, but not so open that your brain falls out. And I feel like some people's brains are all over the sidewalk. It's some of the stuff that people are bandying around. Did you guys see we're not a macro podcast this week, but we are did you see that there was a $300 billion deal that OpenAI locked up with Oracle securing compute? That also just speaks to what amount of money will people not I guess maybe one thing that's different this time with this platform shift is what would you not throw? How much money would you not throw at what people think is going to be an infinite money printer, right? Like people didn't really get what Google was doing the first time, but now everyone thinks is going to be the next thing. Maybe that explains at a smaller level the Stripe approach to owning their own platform, right? Like everyone wants to be the platform, everyone wants to be at the base layer. I don't know.
The things I'd say on that are, well, number one, nothing has moved in terms of the quantum of capital like the AI infrastructure build out. And as the the $300 billion deal. So a couple of notes on that. Number one, the money is not raised. Number two,
It's not. It's really bad.
infrastructure is not available. And number three, OpenAI is saying this is the first of a few of these size deals that they'll be making.
And number four, Masa has not even raised the money that he's going to put into OpenAI for the last round, but they're also, number five, doing a secondary deal at almost twice the valuation that Masa is investing at. And so, like, the bubble right now is in AI. And I think if there is any sort of bear case, and like, if there's any sort of bear case for crypto, it is related to AI. The problem with that thinking is that AI is actually the most rate sensitive industry because building these data centers, like, people are talking about quantums of capital that exceed the amount of money that are available in capital markets today. Where, like, we talked about at some level, it's like Sam Altman competing with Secretary Bessent on finding buyers for paper. And so, like, rate cuts bring that, it's like the most beneficial. And so maybe like the rate cut cycle is correlated to like this GPT release schedule in the sense that, like, there's maybe another year or two. I took the side of like there will be no recession or bear market until the AI bubble pops, and I think I've been proven right on that so far.
We got 5 minutes. Can I just get a super quick take? The big story that we didn't talk about is Brian Armstrong teasing the idea that there might be a base token. Yeah.
Michael said this would never happen. You go first.
I didn't hear you. Say that again.
Michael, you said this would never happen. You go first.
Well, teasing it is not launching it. That's what I will say.
That's fair. That's fair.
So, look, I think the only way that this happens is if there is regulatory clarity with the Clarity Act. And I think that's what they're essentially teasing. And that's why Brian is working on the Clarity Act. Because if there is a path for there to be a decentralized utility network token that is issued or by a subsidiary or by a publicly traded company, then there's a path forward for that to happen. And I think, frankly, until that happens, like, they're not going to be able to issue a token. So my comments really don't remain, unchanged. But I will eat my words if they launch a token.
100% they're going to launch the token, and it's going to be a disaster, because I do understand Michael's point is basically like, you can't launch token and not give 100% of it to shareholders. There's no like third door where you can just rug your shareholders and like pay yourself money, if you're not like an employee. And even all that stuff is regulated by board compensation agreements and frameworks. And so I think they will launch it. I think they will find some sort of legal, novel way around it, but it's certainly not going to be a straight path. And if you're banking on the base airdrop to bail you out of 2 years of holding whatever Cosmos, you're so wrong. I think you're already done.
Look, and I will eat my words if that happens, but I will also say I think that if there is a path for them to launch it, that also means that everybody else who's a publicly traded company who has the same type of infrastructure will be able to do the same thing, which I think is actually bullish, because that's how you can have this integration of like token and equity, and we'll figure out what the rules are. Like, there will be a structure and we'll figure it out. But yeah, to Vance's points, all of those things need to get sorted out. And I think the other thing, just to quickly call it out, I know we're running up on time, but the other thing to call it out is the rate cut. And I know we're not a macro pod, but what we also signal, the Fed also signaled, is that there should be two more 25 basis point rate cuts by the end of this year, and then another two, potentially three, in 2026. And what that gets us to is, frankly, and I think this is going to be something we're going to continue to talk about and we're going to continue to see, but we're going to start to see the spread actually be a huge driver of the narrative within crypto, and what I particularly mean is, what do you get in a money market versus what can you get deploying stablecoins into DeFi? And as that spread widens, you're going to see inflows. And as we see inflows, you're going to see more activity. I think, if I was to point on anything, I think we're entering into, as we're looking at these rate cuts and two more by the end of the year, we're entering into what we'll call the DeFi supercycle.
I completely agree with that. I also think, I might have told you this right before we left, but I was talking to someone who their framework was kind of like, I'm buying coins that I think boomers. are going to buy. And the way someone else phrased it is like, hey, I'm trying to think of like, what is, Philippe, or what's his name? Philippe Coutu, the Coutu guy. Yeah. Philippe Lafont, when he looks at this market, what's he going to think is interesting and buy? And
buying ETH.
He's buying ETH too, 100%. But it's also very good for ETH, right? Like the other big thing for Coinbase this week is they rolled out their Earn product that leverages Morpho. So shout out to Morpho. Also shout out to the chefs at Steakhouse for being the vault curator here. But yeah, you can see like Morpho's done extremely well. They've got a very interesting architecture here, but you can also see the amount of interest broken down by asset. People are really leveraging stable coins for the most part, but there's a lot of yield that's being generated on ETH. I'm not going to be able to figure this out right now. We're doing it too fast. But yeah, it's really good for ETH basically as well at the same time. So I don't know. I think it's a really interesting time. I agree with you guys. It's a bit of I'm glad you guys are all pumped and also, ignoring CT at the moment as well, because I think that's...
But sometimes you got to go put your phone down and go for a ride.
You certainly do.
Or go build something, or like contribute to something. Like sitting on the sidelines and watching it happen is not a job.
I would agree. It's super lame. All right, fellas, this has been a really fun one. I know we got to wrap here, but pumped to be back in the saddle with you guys, and see you next week.
Next week.
Cheers, guys.